Hey everyone, welcome back to our channel. My name is Amor Porter. Are you tired of feeling like investing is just for the super rich, the super savvy, those who have it together? Does it feel confusing to think about investing? How many people think you need thousands of dollars to begin investing? And it's too complicated. Well, that was me. That was me about 10 years ago when I turned 40. I felt like it was very confusing. I knew I needed to do this, I knew I needed to invest, but I don't know. I just was worried about failing, to be honest. And if that's you, I have something for you today. And that is we're going to begin investing with as little as a weekly dinner, $50. Okay. So we're going to talk about this challenge. I'm so excited about this challenge. And I really do think that it's going to help you. And I waited until I was 40 to start investing. Wasn't a wise decision. I always knew I needed to. I had my pension as an educator and all of that. And so I just thought that was going to be enough to take care of me. And then one day I was looking at that pension email that, you get, and I realized, oh, I was going to need more if I'm going to be able to really live the life I want to live and also be able to leave a legacy for my kids. So, we're going to get started today talking about how to use just $50 a week to start investing. And we're going to do it together. It's going to be a 3-month challenge. So, what we're going to do is we're going to look at two investments, and I'm going to talk about those two that are pretty strong investments, but it won't require us a lot to be able to invest. How many of you can, yeah, I can start off with $50. I cannot go out to dinner one day or not order DoorDash one day a week to be able to start to build your future, the future you have or want for your kids. Hope that's you. All right. So, if that's you, please hit like and subscribe to this channel so you can be hearing more about just how to begin building a future for your family. All right. So, here's what we're going to do we're going to take $50 a week and we're going to be looking and comparing two ETFs. And so, let me tell you just a little bit about these ETFs. So, we're going to be looking at SCHD and SPLG. Okay, I know you're like, what are you talking about? Okay, so these are two fantastic ETFs. And what's great about ETFs is they're diversified already. So you don't have to worry about just putting all your money in one basket. So SCHD is a solid dividend investment. And SPLG, it kind of covers the broader market. Best thing part about it is thanks to fractional shares, you can invest any dollar amount you choose. So you don't have to buy a full share of this investment. All right, so here we go. Let's start with SCHD. So this is Schwab US Dividend Equity ETF. It is like, let's just say it's like your reliable income generating friend. You know, that girlfriend who's always there for you, all of that. Okay, that's SCHD. And as of July 25th, the approximate price was $27.32 per share. What it covers, it kind of tracks the performance of the Dow Jones US Dividend 100 Index. Look. All right. So what does that mean? What that means is it focuses on about 100 US companies that have been consistently paying dividends and are financially strong, like Coca-Cola, like something that has a history of being a strong company and they pay out dividends. So we're talking about established companies that are stables and we can really count on. So, why is that a great option It's a great option because of the income potential. It provides a steady stream of dividend income. That means they're paying you as you're investing. And these dividends or the money they pay you can be reinvested to buy more shares, which is going to supercharge your growth through compounding. And it's also stable. It tends to invest in companies, of course, that you can count on. So it's less volatile and it's low cost. All right. So, hey, like I said, that friend that's with you, no matter what, no matter how much money you have, steady with you, been with you since you were like, hey, we grew up together. Okay. So that is that type of investment. All right, let's go to our second one, which is SPLG. So this one is a broader market growth engine. So this is one that you kind of want to be in for the long term. And what's great about this is we will be putting our money into a growth ETF that is aligned to the S&P 500. And so we know with the S&P 500, those are the 500 top companies. And its big sister, which costs a lot more to invest in, it does pretty well. I'm not an investment expert, but over time, looking at the data, it's done pretty well. All right. So what is the S&P 500? You might ask. Okay, so if you've heard of the S&P 500, it mostly represents the 500 largest publicly traded companies in the United States. All right, it's some great companies in there. And when you invest in SPOG, you're essentially investing in the overall growth of the US economy. And so, what's great about this is it has broad market exposure. There is capital appreciation. And so, because of this, over time, the primary goal of these companies is to grow and we can increase our shares over time. And then it's also low cost. It's lower cost than a lot of the other ETFs that kind of model the S&P 500. All right, so here we go. The power of $50 and our 3-month challenge. All right, so we're giving up dinner once a week. So, all right, are you ready? What are you giving up? What dinner? What meal? Is it Chipotle? Is it Red Lobster? Where is it that you're like, hey, this week we're not going to eat there? All right. So this is where our fractional shares are key because, as you know, we talked about how one of them cost about $74. And so what we're going to do is we're going to buy a fractional share of this, which means you don't have to pay for the whole share. And you're just like, hey, I want to invest 25 in SCHD, and then I want to invest $25 in SPLG. And we're going to do that at a brokerage, which will allow us to just bite off a little bit and invest. All right. $25 each. I know you can do this. So here's our plan. Every week, we're going to invest a total of $50. We're going to split the money, $25 SCHD, $25 SPLG. And over the next 12 weeks, which is 3 months, that's a total of $600. We're going to look at each one and see how it's doing. And at the end, we'll kind of decide, how did our money do? Which one gave us the best returns? And of course, 3 months is not a long time. So we're just going to learn a little bit. And it's definitely the magic of compounded interest that is going to be at work. So think about what would it be? Let's just say we only got a 1% return on this, right? That's not a lot of money, but over time, in 5 years and 10 years, it adds up as you reinvest. So even if we get a 1% total return, that would be $6. But over 5 years, over 10 years, you know, that would be a lot of money. So we're going to just get started with this because, hey, we're ready to get started. We're ready to stop wasting time and begin to be able to build wealth, not just for ourselves, but for our families and for the many things we want to be able to give to. Right, ladies? All right. So, how do you start? So, first, you're going to open up a brokerage account. You can open up at Fidelity, Vanguard, Robinhood, are pretty good choices. And you're going to look for dollar based investing or fractional shares. They all have that feature. And then you need to fund your account. So, you're going to link your bank account and set up a reoccurring transfer of $50, almost up to 60. All right, $50 each, but make it automatic. If you got to think about it, it's not going to work, right? Because we're kind of forming this new habit, this new muscle to be able to invest. And you're going to, it'll have you select where do you want to invest, how much, and we're going to have it automatically taken out of our checks. Are you ready, girl? Are you ready? We got this. All right. And so, all during the time, hey, we're going to just, this is going to be a real world example of how accessible investing truly is. So, if you're ready to start this investing journey, or if you're just a little curious to see how it plays out, subscribe to this channel, hit the like button, and I'm going to fill you in on how it's doing for me. And what are your thoughts for redirecting dinner money into investments? All right, let me know in the comments below. And if you found this video helpful, please give me a thumbs up. Until next time, happy investing.